Alrighty, we're live. I am joined by Lynell and Dollar Will. First, as always, I'm going to do a sound check on my end. Um, we have these two brothers here talking about what I like to call an extinction level event. Uh, now, I say these things, but I always find it interesting the uh, the issues that we're going to have in our economy and how that's going to affect us all and what can we do to quote unquote avoid it, prepare for it, or find ways to and even find ways to make money off of it and improve ourselves and our own lives with it. And that's kind of what we're here to discuss. So with that being said, let me get to my channel here and see if I can hear myself. Perfect. All right, so I'm sounding good. I have some background noise. I got my network rack up there, so I was really worried about that. So I have like a lot. I got some equipment, and I'm getting prepared for some stuff here in the house. So the genesis of all of this was a conversation that Lynell and I had. This is Lynell with Crypto at Lynell. Everyone's Cash App is below. Please, please go ahead and donate for uh, those that are watching and find this to actually be informative. Also, we have Dollar Will who has a Patreon. So Lynell and myself are part of Dollar Will's Patreon. Lynell is more active in Dollar Will's Patreon in terms of having conversations and discussions. And one thing Lynell, he was like, Mike, man, we got to talk about this. So Lynell calls me up. I was watching TV at the times and eating, so I was like, all right, I'll call him back. And when I called him back, I was like, bro, I'm sorry. I should have talked to you earlier about this. And we were just talking about the economy and talking about Elliott wave theory. Elliott wave theory is something that Lionel and Dollar Will can talk more about and expound on even further. But it's a school of thought in terms of technical analysis to where things happen in waves. And in this case, we're looking at a wave that traces back to the 1800s. If please correct me if anything, Lionel, but to the 1800s, and we're looking at the fifth wave, which could be another downturn for the economy or signify a downturn for the economy. These gentlemen have been on the channel before in many different discussions, but I will be putting on Dollar Will's Patreon in the chat every so often, and along with some other information. This is about MGTOW retirement and discussing how we can actually quote unquote benefit from it in some way, shape, or form, so that we can actually be better off because of it. So, with that being said, I'll start off with Lynell and let's go into what we talked about over the weekend. Lynell,
Yeah, thank you for having them. Appreciate it.
thank you.
Um, we talked about I think Saturday, and
Hmm.
Saturday is when I normally do the one-on-one on Dollar with Dollar Will on his Patreon. We talked about technical analysis, the discipline. We talked about the Elliott wave theory, and the the conversations we have and other people in the group on Saturdays revolve around that and the economy and those specifically those two things. And so Elliott wave theory was founded by a man called Ralph Nelson Elliott in the 1930s. He died in the 1940s, 48. But another gentleman called Robert Prechter took up the mantle and started Elliott Wave International, ElliottWave.com. And he has really been in the forefront of really bringing this discipline to the masses, him and few other people. But now he does a lot of research in terms of the stock market structure dating back to the inception of the stock market, not only in America, but in England, the UK. American stock market and England stock market runs uh, 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 um, congruent, if lack of a better word. And it goes back to the 1788, even prior. And so in Elliott waves, you have a five-wave impulse move, five waves going up, and then a retracement, a three-wave retracement, ABC. And that is redundant on different time frames from a minute to centuries. It replicates itself for what we call a fractal. And so the current wave structure we're in started back in the late 1700s, and it's per Robert Prechter and his studying and his not studying but his research and of the stock market and labeling it and so forth. We're coming toward the end of that fifth wave of that five wave impulse move. When specifically when it'll happen, don't know. But the closer we get to it, the date or the time and when becomes clearer and clearer the closer we get to it. But we know that we're close to it. Now, after a five wave impulse, you have the ABC correction.
Now, Lionel, a question. In terms of the fifth wave or the coming of the fifth wave, what does that signify? What can we also expect? What has happened in the past in other when this fifth wave has been applied or seen in other charts or markets or even stocks, markets, what have you? Uh, what do we expect, and
Now,
why is
oh,
this
go
a
ahead.
possible issue for us?
Now we're already in the fifth wave right now. We're speculating to be already in the fifth wave. But after the fifth wave comes a correction, a deep correction, and after the fifth wave comes a correction that can be 62, at least 62% greater than greater. Meaning
Everything that started from wave one to wave five that can be retraced between 62 and 78%. So 62 and 78% of the gains from when that fifth wave or that five wave impulse move started, 62 to 78% of those gains can be just erased. Now, since we're dealing on the level of a Korean super cycle, excuse me, meaning the inception since the late 1700s, we're in the fifth wave of that now. And after the fifth wave, you have a severe correction, which is that 62 to 78% retrace. Now, one of the guidelines of Elliott wave theory is a wave two, which is tip, typically is after a five wave impulse. The whole sequence just the whole sequence just repeats itself. So, a wave two retraces typically retraces back typically retraces back to the wave two of one lesser degree. So basically, what that means is on that deep retrace, it retraces back to a level where a smaller degree wave two from the previous cycle, and that smaller wave two from the previous cycle is back in the mid 1800s, which means we're gonna the retracement can bypass the lows of even the Great Depression levels because we are on a more grander, I know that's not a word, but a grander scale. And
Now,
what, go
what
ahead.
is this now in simple terms for the for the not so smart folks, aka myself? What does this mean for prices for stocks right now, and how does this possibly affect our cash flow moving forward in things like our Roth IRAs, our 401ks, and other things like that? And also, I want Dollar Will for you to jump in here as well pretty soon.
I'll just answer the stocks part. Devastation. Word. Using one word. These evaluations for stocks such as Tesla, Amazon, Apple, the common stocks that you know of, and even the stocks that you don't know of, the entire gambit, they're going to lose a lot of value.
Yeah, Lionel, can you come closer to the mic, please?
Can you hear me now?
Yeah, better. Yeah.
Yeah.
Yeah, you're moving far away, but it was workable. So I wasn't sure what was going on your end. Thanks
Okay.
for
Yeah.
pointing that out, Dollar. Complete devastation or a large discount if we're gonna look at the silver lining, okay,
Right,
like come
right,
on, guys,
right.
let's be optimistic here.
Yeah, yeah.
Let's not scare people.
A big discount. When you walk past stores and they say 50% off.
Yeah,
Well, it's going to be 78% off, 62% off, that type of deal, and not just stocks, but housing, and other assets across the board. But yeah.
and that's one reason I had the photo, the thumbnail that I did, almost like a fire sale. Everything's burning in a sense, and that's kind of the feel that I had when you were talking about this dollar will. Go ahead, brother.
Yeah, this is I'm kind of like wrestling with this within myself. It's like there's I mean, I know what Elliott wave theory says, but it's like I got my own cognitive dissonance and I'm kind of battling because like what's the title of this show that you what do you call it? I'm not hearing you.
He muted.
Sorry about that. Between us, it was the extinction level event, but really it's what
Yeah.
lies ahead.
Yeah, you got it. The use of that word extinction.
Mm-hmm.
I wanted to take issue with. I wrestled in myself. Like I wanted to take issue with that. I mean, okay. One part of me wanted to say, "Wait a minute, that's a little over the top."
Mm-hmm.
But then I said, "Well, is it?" Because I
Yeah.
really wanted to bring that up with you. Like, do we really want to like really go that far with it? But
So
hold on. Let me
okay,
tell
I
you
apologize.
what my crisis of conscience is. This level of correction we're talking about, there's nothing on record of human civilization that parallels this. So if you think that banking systems and money, currency, economies, if you think that the destruction of economies and banking systems is tantamount or threatens the extinction, then it's an appropriate title. It's so, but we don't have anything to compare this to. I mean, we know what Elliott wave theory says. We know that it works on the lower time frames that we live in. As we watch these 5-way cycles play out over the course of, say, whether that's a day, a month, a year, 2 years, we know it works. We wouldn't be still doing it, I've been doing this Elliott wave theory, learning it and practicing, and it's like a doctor and a lawyer. They refer to their field as a practice because they get better at it as they go. Elliott wave theory is like that. I would have left it a long time ago. I got into this around 2007 ish, around then. So we're talking about 14 years. I would have left it a long time ago. Or Lynell and others in the group, if the theories didn't play out to their eye in real time, they would have left it. So we know it works on these smaller scales, but the theory holds that these corrections at these certain degrees happen at all time frames. So we getting ready to see if this thing is going to work when applied to, what are we talking about? 300 years of data.
So now, with that being said, one of the things is the title is like what lies ahead. Extinction level event. That was me being a little bit over exaggerating it,
but maybe
I
not.
like the way
But maybe
I like
not.
the way you put it. Yeah, no, I like the way you put it, and that's the reason I say that is because I don't know what I'm talking about this. So I'm glad you clarified that in terms of like, what you thought about the title and everything too, and or the discussion we had, because my biggest thing is like, okay, if this is going to be like such a problem that we could possibly foresee, right? The black swan to end all black swans, or the event to end all events. How can we prepare for it and put ourselves in a better place? So just to and I'll let you continue, but Keanu asks, what are you talking about? If the United States defaults on its debt, I think they will raise the debt ceiling. What are your thoughts on that? Because I think it's all that encompasses what we're talking about too. Like that might be a
Yeah,
part of it.
I guess yes and no. I'm talking about the known and the unknown. I'm talking about if this cycle corrects, like we think. I think we're going to be fine through, more than likely, be fine through 2021. But words like grand super cycle, you're going to start to hear words like that.
Wait,
Grand super cycle correction and things like that. You're going to hear these words.
Dollar
I want
Will.
you to think about this interview when you start to hear those types of terms.
Dollar Will, who is also reachable at patreon.com/dollar WIL. So there's only one L in Will. So Dollar Will, that is available at Patreon with this information and more. Shameless plug. When you're talking about this type of stuff, and it in the type of possible devastation we have that could be had to people's pockets, to people's retirements, and saying, hey, listen, we haven't seen anything like this. In your head, what, like, those type of words, what does that invoke in you? Like, anybody got the speaker on in the background? I get like it's probably just me. It's probably, oh, okay. Yeah. So, what does that invoke in you, Dollar, in terms of like your thought process, and how do you see this and visualize this in your mind? Most people imagine an apocalypse with zombies. What do you imagine with a possible financial apocalypse? Like, things are still be here, but what is it going to look like? I'll mute myself. You can go ahead.
What goes through my mind is what we're seeing right now with the pandemic, in terms of how, it doesn't. Humanity has endured pandemics before, but they have always been, catastrophic. But we've been here before. We've survived them, but has always stressed the hell out of the systems. So we got a healthcare system that's not really designed for this. And so I'm saying, in the financial and the economic system, we're talking about equivalent stress like that. Look at what we've had to adapt to with the pandemic, where they're telling people, if you're sick and you don't have the vaccine, don't come to the hospital. I mean, who thought that we would ever hear something like that? So I'm just saying, more of the same, but in the economic world, in the devastation to people's retirement account, that type of thing.
Now, quick question, in terms of what we've seen before and what's possibly going to happen, Dollar Will and Lynell, what do you think we're going to see in terms of levels? Are we going to see 2008, 2009 type levels? And how does it correlate compared to that?
No, I'm gonna say that's nothing. 2008. That's a burp. Okay. I'm saying we're talking about. I mean, Lynell was right when he said we're not the low in 1932. That's not off the table. We're talking about levels that your mind can't comprehend. Every price appreciation that you've experienced in your life and your grandfather's life, gone. But not immediately, slowly. Prices move in waves.
Lynell, your thoughts on this before my brain starts coming out of my ear.
Right. So what you just said is what prompted me to call you. I thought that wave two. Well, I thought this retracement was taken back to the Great Depression lows, and me and Dollar Will were discussing. He was like, no, that was wave four. Wave two is 1800s, and I just froze up. I like what? And what I'm trying to convey is this type of fear in me is more of a economical. I'm not talking about, oh, the world's about to blow up, oh, this is a zombie crisis, oh, nuclear holocaust. No, this is more financial, and in on many levels, this financial teardown that we're about to have is much worse than a zombie holocaust or anything, because the closest thing we have on record, and there's no one alive that remembers the Great Depression. The closest thing we have on record as to how things could go is the Great Depression. And there's going to, the fallout, the residual fallout of this goes into many other aspects of everyday living. People's jobs, like I would say, people's retirement accounts, people's housing prices, how much their houses are worth, food, during the Great Depression, soup lines were synonymous. Soup lines were synonymous with the Great Depression. You look at the Great Depression photos, you can see people selling their cars for $1 with a sign saying, "Lost all my money in the stock market, car for sale for $1." And like I like what you said, we'd be optimistic. Severe, severe, severe discounts we're talking about. During the Great Recession, houses were half off. You could get a $500,000 house for $250,000. And like Dollar Will said, that's the first. Preparation now. I mean, it's the financial fallout is what we're talking about.
So I've said in previous videos that luck is preparation meets opportunity. I do believe in, like, raw luck, the universe just gives you stuff, but preparation meets opportunity. So even something that happened to me personally, I was in, I got into some money, and the opportunity came around where I got a nice little sofa sectional, and every bit of it reclines, and it's amazing. I love it. But if I didn't have the money, I didn't make the preparation all the way back to 2017. Then this money wouldn't be here today. Looking at a 18x gain on some money that I had sitting around, so that was great. But in terms of what we're talking about here, how can we prepare? What is a safe asset? Is anything safe? And two, what should we be looking for in terms of opportunities with the money that we've put aside to prepare for this? Any one of you guys?
Just a short cash will be king.
Well, first, let me interject and say that we are not financial advisors, financial analysts, or anything. We're just individual traders and practitioners of Elliott wave theory and technical analysis in general. So
Thank
first,
you. I totally forgot. I totally forgot to say that because I got excited with everything else. So thanks for
so first, you need to go talk to your financial advisor. If you don't have one, get one. And from my point of view, I will say this on record: if your financial analyst or financial advisor does not know technical analysis, doesn't appreciate it, run. Don't work with them. If they don't know it, but they subscribe to information from market technicians, that's what this category is called, then that's fine, because at least they're exposed to the information and they can guide you. But if they think that technical analysis is garbage and voodoo or whatever, run. Find someone else. That person has too much of a deficit to overcome. Technical analysis has been around since one of the fathers of it, put it this way, is Charles Dow, of the Dow Jones Industrial Average. So when people put it down, they act like it's something that just came around. It just wasn't. It just came on the scene a few years ago. You know, to get your license to work on the SEC, part of the test, you have to know technical analysis. So I'm amazed when I hear all these people with standing in the finance world speak as though technical analysis is not widely practiced around the world in financial markets. So first, you want to make sure that your financial advisor, among the information that they're considering when they're giving you advice, is an assessment of the technicals, as we call them. So, but if they're only talking fundamental analysis and value and buy on the dips and all of that, my personal opinion, crap. It's crap if that stuff is discussed in isolation apart from technicals. Fundamentals are important if you combine them with the technicals. If they don't combine it with the technicals, run. Find someone that appreciates technical analysis, that's certified, just like, you know, all of the other financial advisors. But get you one that also is adept at technical analysis, or at least subscribes to that information, where they have someone that's, you know, that's giving them that information, so that way they can help you pardon the pun, chart a safe course. But in terms of where do you hide, at this moment, that's not clearly known. But I believe that there will be a place, not just to hide, but to profit. Okay, you can always get out. You don't have to be invested. You don't have to be invested in stock. You're not going to die if you don't own stocks. You're not going to see right now. We're in the part of the cycle where we're in a bubble. When stocks are powering, you know, at their strongest, money should be invested in stocks because it's making so much money. Your money is growing so fast when the stock market is on fire, and we are at a historic high in the stock market. This is the highest in the history of humanity, history of civilization. This is it. Okay, that's where we are. We're in the good old days right now. This is it. It may not feel like it, you know, with the pandemic and everything, but from a financial perspective, in terms of your retirement account, and you know this. Some of you that are around late 50s, you know this. You open up you never thought that your retirement account, your 401k, would ever grow to this number. We got a whole lot of people walking around here 60 years old that are millionaires. They just know not to let y'all know that. Okay, because that's just how much on fire the stock market is. So when the market is on fire like that, the sentiment is cash is trash, meaning don't keep your money in cash because it's not growing. There's a party going on in the stock market and you need to be a part of it. Well, when this wave 5 ends, that axiom of cash is king is going to come back.
Now, so we're going. Can I interject here?
Yes.
It's funny that you say that, because it's to the point where, and this is something that I subscribe to a certain extent, is that, you know, your best savings account, or your best account to where you could put your money for actual growth, is cryptocurrencies at this point. And when you're saying things like that, this is the sentiment that I'm hearing in so many other places. This is, you know, the sentiment of videos like how much Cardano, Ethereum, or, you know, whatever cryptocurrency do you need to be a millionaire by 2026, 2020, or 2030, so on and so forth. Semi-Black Brain Trust reunion. Yes, Richard Dixon, appreciate you joining as always. But it's funny that you say, or it's so true what you're saying here about how a lot of people are looking at cash being trash, and that's been the sentiment for a number of years. Where even you know, a a regular person, if you will, that doesn't know much about this is at least invested in some type of ETF, and they know at least I can put my money there and get some type of gains without making, you know, a stock pick, but I'm playing the game a little bit, you know. So that's just pretty interesting.
What I say to people, first of all,
oh, and Dollar, let me know when you want to share, when you want me to share the screen, okay? Go
okay.
ahead.
What I say to people, and I really firmly believe this, not only thing that's safe is knowledge, education. There is no one investment vehicle on earth that you can put your money in and everything's going to be all right. When people say, where can I put my money and everything and be safe? I hear that as, what can I do without I don't have to think? Give me one little button to push, like one pill to take and make it all go away. No, you're going to have to think. You're going to have to make learning about these markets a priority. Your life may depend on it. Your family's life may depend on it. So invest in knowledge. Change is constant. There is no one thing. Now, on my YouTube channel, I chart the S&P 500, and I try to track the major investment vehicles that people should follow. You should be following the S&P 500. You should be following the when I say follow, the trend state of the S&P 500, the trend state of the US dollar, the trend state of gold, the trend state of the interest rate or various interest rate. But you know, the main ones that we're looking at is for mortgages, okay, home mortgages. That's a good one to look at. Bond yields. That's a very good one to look at. If you can keep your keep a good understanding of the state of those trends, that you will see when the trouble is. And so I apply technical analysis to those key or vital instruments. And that's what I do for myself and teach the people in my group to follow, to get their own reading on the state of the trend and the flow of money. Okay, because in order for the market to fall, the reason why it falls is the same reason why it rises. It's just in the reverse. It goes up because people put money in it. Well, it goes down because people take money out. And so in technical analysis, our premise is that everything that there is to know that's important is in the price chart. Because whatever you think about a stock, earnings report, sales, whatever people think, at the end of the day, you got to go and buy and sell. So the culmination of all your feelings and emotions come out. If you're optimistic, it comes out in purchases. If the sentiment is pessimistic, it comes out as sales. The technical, from the mind of a technical trader, we just want to know, is it going up or down? We don't care why. The fundamental side, they want to know why. But I understand it from their point of view. They want to know, is it a short-term reason why it fell? Because if so, then we can buy some more because it's cheap. And, you know, because typically it will continue trending higher. Well, that line of thinking works until it doesn't. So when we're looking at something, you know, in every major investment firm that's moving big money on Wall Street, they got some technical folk in there, as well as the fundamental folk, and they fight it out, and then they both present their arguments, and a decision is made. So more often than not, the technical side wins out in terms of technical analysis. Fundamental analysis can point you to the bargains and the high quality companies. It's very good at that, and isolating the companies with real good businesses, underneath it. Companies that have products, real products, not smoke and mirrors, real products with real sales. So fundamental analysis is great at that. But technical analysis can tell you when to buy that thing.
Now, with what you just said, a lot of people discount knowledge, right? Like they always just look for not knowledge, meaning knowing what to do, having the right mindset and things like that. They just want to know what to buy. Buy this ETF, buy this at this price, so on and so forth. They just want the signals, if you will. Now, I've seen this quite a bit, but Keanu has put in covered calls. Now, I've heard about, this instrument or this way of buying, I think, options. But what are your thoughts about that in terms of in the face of what we're looking at in our future? Is
It's
call something
nothing.
that we
It's
can look
nothing
at?
wrong with that strategy, but you have to know what you're doing. So back to what I was saying about knowledge. So if you want to use options as your market where you want to make money and profit from the volatility, and volatility is just an extreme move. It could be up a spike. That's volatility. Price going up real fast, real high, extreme. That's volatility. Well, it dropping like a rock. That's volatility also. So volatility goes both ways. Okay, so if you know the options world and that's your way, fine. But that's not the only way. I'm not even going to say it's the best way. I'm not going to say any particular market is the best. The one that you understand is the best. You got to take the time to learn, and so and pick the market that you that you want to invest in. But you gotta. What I hope from this show is just to plant some seeds, because as the markets continue to give these technical signals on the major TV networks, you're going to start to see they call market technicians. They're going to come in and put up the charts. And you can put up the chart now, the one that I have down there. Well, I'm not going to look at it. I just want to show y'all this real quick. And I'm going to drop this link in the chat. You know what? I can't. Can I get you to drop it? The first link in that. Yeah, maybe put it again down at the bottom closer so they can watch that on your own. Hopefully it's not too over your head, but he's explaining the wave cycle and how, pointing out that we're near the end. He says in the video that the end of 2021. I think we're going to go a little beyond that. But in terms of again, as an Elliott wave theory trader, we count waves all the time, so it's not going to get past us because we're going to see it. All right.
Can you enlarge the video on your end and so just make it full screen on your side? And then that way it'll look bigger.
Can you see it good better right now? Is this good enough? I'm not really going. It's kind of blurry even on mine.
Yeah, it is. Okay.
But hopefully in the video when y'all can look at it, I'm not going too much in detail. I'm just trying to show that this area here. Can y'all see my cursor moving on screen?
No, I don't see your cursor.
Okay, don't see that. Okay. Let me see. How can I?
Sometimes it's an option, but I don't see it on your screen. Maybe it's just because it's shared like that.
Probably.
Or because since you're sharing it and I'm not.
Yeah, but let's just say that first. Okay, can I get you to trace from the low on the left?
You know what?
No, they won't see my cursor.
What?
You want me to share my screen?
Yeah.
Why would it work for you? What am I doing wrong right now?
I don't know. I just came back.
Okay, well, you give it a shot and count the 5 waves.
Okay. All right, Lynell, are you moving your mouse? Oh, okay, yeah, great. I can see yours.
Yeah.
All right, great.
So, it'd be 1, 2, 3, 4, and then up here is 5.
And explain a little bit
now,
more.
When he said 5, when he counted the end of 4 and the start of 5, that's the end of the Great Depression. Touch that. That's the end of the Great Depression. So if you look at that whole rise up, that's us going. we hadn't had World War II yet.
Mm-hmm.
America was becoming like the world superpower. We were still marching for our civil rights, integrating the military and all of that. So all of our prosperity that we've experienced in America really comes in that wave 5. And so my whole thrust as a technical trader has been to try to get, especially my people, Black people, to see that our lack of participation in this huge run, that is the explanation for our economic situation. That we are in America and capitalism, and we did not participate in capitalism. Okay,
Now, that also makes sense.
our role has been to look for a job, which is great. That's only part of the story. In capitalism, what's the root of it? Capital. And so you have to invest your money in the stock market to participate in that swing, because that's how you get generational wealth. You cannot participate in capitalism and not participate in the financial markets. If you do it, if you're in capitalism and you're not participating in the financial markets, you are a slave.
Right, and this gets into where people talk about the wealth gap, and how it was stolen from Black America in so many different ways,
Yes.
and for so many different reasons. When you look at it, charted in a sense, the growth of America, the America becoming not only just a player on the world stage, but a leader in the world stage and world in economy, a leader in terms of like everyone defaults to America for advice or what have you because of growth like this. Because you're seeing how, even after 1932, is it on that chart? Even
Yeah.
after 1932,
Henry Ford assembly line right in there. Okay,
yeah, and we're
the
having such an
industrial age
explosion.
right in there, the
Hmm.
airplane, and now we have intercontinental travel at a faster rate right in there. So now
Hmm.
you got global trade, okay, global. Now you can sell your products to more people around the world. That increases profit. Okay, in a minute we're gonna have the baby boom kicking off because of war. Okay, so that, and the baby boom was not just an American thing, it was a worldwide thing. More babies means more customers. More babies means more people need food, clothes, shelter, schools, everything that humans consume. They just need more of it. So markets expanded, which means profit potential expanded. And so if you don't participate in that, you're a slave. But
Hmm.
we're new at this because we just were, we wasn't too far coming out of slavery. So, we just trying to get a job to eat. Maslow's hierarchy of need, says until you get your basic needs met, you can't plan for future things. So if people are held at the margin, they never are able to elevate to the higher level thinking and plan for tomorrow. You're just trying to eat and live for today. But we, somewhere along the way in our Cosby dream, or Martin Luther King, I have a dream, and EEOC, and creating us getting good government jobs, and creating these Black utopian suburbs, not just Black Wall Street, but the more recent ones, and so on and on and on. So you can, when you think of it this way, and somewhere in here I managed to leave out the computer age, okay, the information age. And so you got the democratization of information, you got all this kind of stuff which resulted in great wealth. Now, all of those are signs of a very mature economic cycle that has to take a pause. A guy famously said on social media several years ago, rent is too damn high.
Yeah.
It's not just rent, it's the cars we drive, it's everything costs too much. And
Yeah, and it's
so there's
crazy.
a correction, a great reset has to happen in order to make way for another growth cycle to happen. So the goal is to survive this, or if not profit from the correction, because on the other side, we get to do it all again. I don't have the the facts on this, but I suspect my grandfather was born around 1910. My family never told me about the stock market. I had to learn it all on my own when I went to I got a real good job early in my 20s. I was about 22, and this young white guy was around 18. And he was talking about stocks and knew so much about it. And in the DMV, he owned a townhouse in Georgetown. He never lived in an apartment. He moved straight from his parents' house to his own townhouse because his family had a practice of investing in stocks. And that it blew my mind and pissed me off at the same time because I'm competitive and I'm in my black bag. And I'm like, he's not smarter than me. But he was smarter than me.
And you
he
almost really
was,
can't compete
and
with
I
that
didn't
because
like
it's a
it.
starting point.
Okay, my pro-blackness was hurt. I got in my feelings, and so I said, I'm gonna learn this. I'm gonna be the first one in my family to know it. And so that just kind of kicked it off. But
Well, just for me to interject there, that's a starting point that you started from a different point, and that's something that I actually share as well. Where I didn't know about that is, I'm 35, and I'm probably the first person in my family, or I am definitely the first person in my family to talk about stocks, and definitely, of course, talking about other newer markets like crypto because that's coming up, right? So it's like I totally understand that. Also, another big thing is land, like land ownership, not just home ownership, but actual land ownership where you can actually take your parcel of land. How long has land been around? And then, people don't know about it. Now, my family, my parents are immigrants, came here, got their citizenship and everything else like that, and then brought my brother and my sister up, and I'm the anchor baby. So it's like, okay, it's understandable that they don't know about it. But then you look at your own family, how many generations for like Black Americans that have been here, whether you're ADOS or FBA, how many of you have been here? Or even if you're, for some of my MGTOW brothers, or like, from, whether it be white MGTOW or any other color of MGTOW, like how long has your family been here? And you don't hear about these things. You don't hear about these thought processes in terms of markets and these views, and
yeah,
that's a very surprising thing.
I brought up that he was white to make the point about I don't mean
Oh, I
to
didn't even
infer
hear
that I
that.
don't mean to
I didn't
infer
even hear
that
that part.
I don't mean to infer that everyone white knows about stocks. Okay,
Right.
he came his I brought it up one because on one level it is a racial divide thing, but then on another level his family had a tradition. Because I asked him, how did you know this stuff? And he said, my father told me about it. He would talk about it at the dinner table all the time. So I said, whoa, my family, we don't have no tradition like that. So it wasn't just that he was white, but his family had that tradition because it's not that all white families know about stocks. Okay. So, but
Okay.
just to make the point about how different cultures are, because we're at a different, station, in the whole socioeconomic thing. So you kind of privileged to have the excess money to be putting something in the stock market. Okay, so I
Yeah.
came, I had a pretty good, hot, very good paying job, young, and so it allowed me to have extra money to even back to Maslow's hierarchy of need. So my immediate needs were met. So that freed me up to think about what to do with my excess. But most Black folks don't have no excess.
Right. So I live in rural Georgia, and the next county over from me, next city is Alma in the county of Bacon County, Georgia, known for their blueberries.
Yeah, now
And
more
I,
the reason why I brought up my
Mhm,
grandfather in 1910 on this chart
mhm.
kind of point to 1910 roughly. Just a
Hold on. Let me get this out, and I'll let you do that. One of the things is that in that county, there's not a lot of opportunity, or in this general area, there's not a lot of opportunity. In this southeast region of Georgia, there's one area code. So there's not a lot of people, everybody's spread out, and there's not a lot of opportunity. And I see my white coworkers, former white coworkers that from my night job, and they're asking me about, cryptocurrencies. They're asking me about investing, and they don't know anything about this. They know that they have a 401k and they put a little money into it, but they don't understand why. They don't understand growth, and they don't understand some of the things that that the three of us talk about on a regular basis. So it's definitely something where a lot of people are not privy to it, and a lot of people don't understand how a little bit can go a long way. But you have to get in, and you have to get, more importantly, the knowledge more than anything. Go ahead, Dollar.
And the reason why I mentioned my grandfather, because it could be your grandfather. You likely have some grandfather that was around in 1910. Well, my grandfather was born in 1910. In 1929, the stock market peaked. That would have made him 19 years old. So he was a young man, not really starting his family yet. And then that crash happened. Okay, my father was born during that period, though, that crash. My grandfather spent the rest of his life never putting money in a bank until his kids got old enough. We had to come down here. We would come down to in the South every Thanksgiving and get his money and take it to the bank. He would bury it. He buried money so long he forgot where he put it. Alzheimer's came, set in. He forgot where he put it. We would dig up in the yard to find the money, and half of it's molded and gone. I'm saying this was my family story. It probably was your family story. So
also, I want to point out a lot of these historically rich, English rich families like Rothschilds or these old, super old money families. This timeline from 1788 to 2021 is 233 years. That's about the same time these families have had their money and kept their money um, in their family. As we go into after this grand super cycle resets everything, like Dollar Will says, we're going to go into another grand super cycle. Well, that other grand super cycle is going to be longer than what we're talking about. So you can set your dynasty, your family, your progeny up after this reset, and they can hopefully keep that money in their family for another 500 years, because this next cycle is going to be longer after this reset. They just keep building on top of one another and becoming longer and longer and longer. So this next cycle can take 500 plus years. If you can be the impetus of your family building on something, carrying it over to the next generation for the next few centuries. It's hard to really submit what we're saying in.
yeah, the takeaway is start learning. And I want to say this about crypto. Crypto is too new. We don't know what the heck is going to happen with crypto. Okay? We sitting up here pulling our hair out, trying to figure out what's going to happen to the US dollar and the interest rate. And you got, crypto, people done gone crypto crazy. I'm not against cryptocurrency, okay? I've been in this game. I love everything that make money. I invest in it all, but I'm not religious about none of it. Okay? I love the trend. That's what I love. So when the trend is over, I step off of it. I don't care what it is. I'm not fanatical about none of it. I'm not Dollar Will because I'm pro the US dollar. I'm Dollar Will because the trend state of the dollar reflects and affects many other financial instruments around the world. So if you track the US dollar, you got your finger and your mind right on the pulse of the global engine. And so I keep my eye on the dollar, the interest rate, gold. Those three things definitely. And bond yields, those four things. The move ain't gonna get past me. I might lose a little in the first flash down, but I'm not gonna take the big loss, because when trends directions turn, they don't just drop like a rock all in one day. They just kind of snake their way down over a number of years. You're not going to wake up one morning and we're going to be back in the Flintstones. Okay, it's not going to happen like that. It's going to snake its way down, and then it's going to rise a little bit. People think it's going to go and recover and make the new high and give you all your money back that you lost. It's not going to do that. It's going to turn around and fall and go lower. It's going to keep doing this cycle of making lower lows and lower highs and trending down. And at some point, usually too late, people figure out, oh, the party is over. But I'm saying with technical analysis, you don't have to. The market technicians are the first to know. The people who are not technical traders, they're the last to know. So put that in your ear.
You see, Mr. Dixon, so you're going to be you on Will when that day comes. I love that.
There you go.
I love that. That's well done.
So what we do, we watch the flow of money. Basically, money flees and it goes somewhere. It doesn't just disappear. It's like energy flowing. It will go to something else, and we track all the different investment vehicles, all the different markets, and that's what our job is, to see where did it leave from, where did it go, because we want to be a part of the exodus. Okay, if it's happening, we don't want to be the last one leaving. The good thing about not being rich, super wealthy, is that you can go into the stock market and move all your money in one day, a couple of seconds, 30 seconds. That little bit of money you got, you can press that button, one click, and get all your money out the market. If you Warren Buffett or one of these, what we call them the whales, one of these whales, they have to have a plan, a system for moving their money out the market, because they got so much money in these stocks that when they start moving and leaving the stock market, we technicians can see it. They leave footprints. But there's oscillators and stuff we use that tell us, and on the charts, there are oscillators and their tells in the options market. We can tell when they're trying to leave. Or say, you're not leaving without me. You're not leaving. Yeah, we're like, you're not leaving before me. I bet I get out before you do. See, if they get their money out before you get your money out, then the stink bomb blow up in your face. If you get your money out before they get their money out, then the stink bomb blow up in their face.
Right, because they got like a withdrawal plan, like the U.S. coming out of Afghanistan.
You're right.
So I do want to talk about the two other articles. I posted those in the chat, and I don't know how much time you guys have, but I do want to talk about the other two articles, even if we just give a brief overview.
I think that second link was just a wiki about the grand super cycle, just a basic reading. It's nothing deep. It's not a lot to read. It's just it's just saying a lot of what I said. But you're going to hear these terms, especially as we when we get closer to the end. Here's one key. Prices usually move up. A normal up or down move is like 1% a day. That's normal. The stock market rarely moves 3%. Either direction. I'm not saying it doesn't do it, but you can count on one hand the number of times it does it in a year. It's very rare. When there's a crisis, like money leaving the S&P and going elsewhere, you'll see consecutive days of declines at like 3% or more. You see, like in February of 2020, we were getting 6 and 7%.
Yeah, it's crazy.
That's your clue. There's something serious that's going on, and you're never going to know until it's over, because the people who know, they don't want to tell you. The name of the game is to leave you with the stink bomb.
Mm-hmm.
Somebody is designated to lose, and guess who that is?
It's not them. You.
Not them, right?
So the next one is the 12,000 Years of Elliott Waves, Part 2.
They kind of take this chart that Lynell counted out to 5, and they put the exact kind of dates to kind of you can take those years and look at this picture, and you can kind of see, what they're talking about.
Right.
But you're going to hear more about that concept of a grand super cycle, because when prices start making like when,
Lynell.
when the price takes out the low from March of year 2020, they're going to, all of the TV stations, they're going to look for the market technicians, because it's not really that many schools of thought or theories in technical analysis that can handle or that address big data samples like this. Elliott wave theory is one of them. So all the Elliott wave theory people are going to be coming on TV and explaining, what's going on with the wave count and how far it might go. And you're going to be sitting there like, why didn't y'all tell me this before it rolled over? So
Right.
I'm not trying to scare the hell out of you right now. I am, but I'm not. I want to shock you to pay attention, but just know it's not going to happen like right now, tomorrow. I think at this moment, I'm of the opinion that we should make it through this year. But my opinion is affected or amended based on what the chart is doing in real time. So as I go to my YouTube channel, Dollar Will, and I make postings about the S&P 500. I'm doing wave counts and making projections about how soon how close we are to this hell. Okay, so because the price leaves clues as it's moving in real time, it shows trend exhaustion. There's signs when the trend is running out of gas, basically, and I'm
Yeah, and
looking
it's
for
important.
those.
Yeah, and it's important to have people that are watching out for that, and also just to understand like what's coming and being prepared. I think at the very least, this should be a call to arms or a notification sent out to all our brothers in the space and beyond, that you should be putting money away and watching the markets more closely on when to get in and when to even more importantly, when to stay out. You have your you have your small moves, but understand like the information that was presented here in terms of thoughts and everything else like that. This is not financial advice. This is just three brothers talking about this. But the way I look at this, the way I crystallize this is, okay, there's a storm coming. How do you prepare for storms? And you prepare for storms by stocking up, and then also watching, watching the wind chime, or sorry, watching the weather vanes, and watching the new, watching, information, not the news, but watching information come across and understand, like, okay, look at this information with the thought process and mindset that, hey, there's something bigger coming. There's it's overcast for a reason. It might rain pretty soon, and I think that's kind of the way we have to look at that and look at all everything that was discussed here.
And on my channel, I teach Elliott wave theory and technical analysis in general. I post information through the week. I provide group and individual sessions, so it can be private if you want, or shared with other members of the group if you want. It's always your decision. It's one flat fee. It's not tiers. It's not three different pay levels. It's one cheap as hell rate. It's
Yeah,
embarrassingly low.
yeah, I think it's $10 a month, correct?
Yeah.
Yeah, for now, and I always talk about this when I do have Dollar Will on the channel, and then of course even Lynell, which I've just put Lynell's channel in the chat, is that the information that these brothers are actually talking about, it may not be the quote unquote prettiest, the most entertaining, whatever you want to call it, but being broke is not entertaining. So maybe you need to change your mindset in terms of what you find to be entertaining and what's it called, beneficial to you and your daily life. And I think it's very important. One of the things that I've recently said is or talked about in one of my previous videos is we had a brother, Vention MGTOW, that recently passed away. And Vention was definitely an inspiration to me in terms of moving to a rural area, getting that opportunity and quote unquote living kind of living in terms of like farming, permaculture, and all types of other stuff, and not just living, not really living off the land, but looking at doing different things, maybe even growing your own stuff, so on and so forth. But the thing is, you're gonna have to work to get to that point. And the more important, the biggest thing that you have to do in terms of your work and what you're trying to do is getting your mind right. And I think that's just so important. And I want to say overlooked so much. We have to get our mind right. We have to stay fixated on these things, and uh, you know, put ourselves in the right position. Lynell, Dollar Will, is there anything you guys want to say in closing? Because we're at an hour at this point.
Yeah, I want to say I'm very proud of Lynell because uh, Lynell was in the crypto only, and I met him in a crypto conversation, and I
Hmm.
said something that some people get in their feelings about, but he took it.
I know I was.
He took the gut punch. Basically, I said I wouldn't buy Bitcoin with your money, and this was and this was before it made that. But I wasn't. I was speaking from a chart perspective, and
Hmm.
when it eventually took that dive, he was like, "Wait a minute, I got to learn this stuff," and what I do on my channel, in addition to me showing my perspective, I also point you to other sources. So you don't as insurance against my imperfection. Okay. So you're going to be introduced to other people who know technical analysis, and you can see what they say, see what I say, see what you say, and over time you'll kind of see where I am, where they are, where you are, and you'll figure it out. But Lionel has taken everything that I gave him, and then he went further beyond and started reading other material on his own. And we don't have a necessarily we're transitioning from a teacher student relationship to peers, because Lionel now, he'll critique me on my chart, and we'll have like healthy debate on the channel. And then there's
Hmm.
another brother named Nelson. His game is real good too, and so we'll like have spirited debate, but based on our tenets of technical analysis and Elliott wave theory. Okay, and so, but as Price does certain things, it will invalidate the incorrect theories. That's it's there's a science, math component to this. This absolute. It'll kill the definitively destroy the wrong argument, and I love that about it. And so yeah, I just want to say publicly that I'm inspired by Lionel's growth.
Oh well,
Yeah,
thank you, appreciate it, thank you.
I was also one of those guys that took the gut punch,
Yeah,
definitely at the same time as Lynell,
yeah,
and and it is and I've said it, I think I've said it to you, Lynell, like your growth in it in terms of it's crazy to hear that Dollar will say, hey, listen, you're moving into the pure role. That's kind of like, whoa, not worthy type stuff. So that's cool, brother Lynell. What you got, man?
yeah. And wait, what y'all talking about? For those who don't know, was back in 2017 when Bitcoin, in the midst of Bitcoin.
Closer to the mic, bro.
Oh, hold on. Can y'all hear me now?
Hmm.
Yep.
Yeah, was during 2017's Bitcoin bull run on its way from what $1,000 that year to $20,000. And me and Mike was talking about, yeah, we making money, we making money, we making money. And Dollar Will just said, I won't touch with your money. I went back crypto with your money. And in the midst of it, we couldn't understand, like, what do you mean? We making money, man. What man, forget you. But then 2018 came around, it was like, oh, that hurt. That really hurt. And
Very expensive lesson.
right, very expensive. And
Yeah,
we
yeah.
we did
That
to
didn't
listen.
mean don't buy crypto. That means that there's a safer time to buy
Mhm.
it, and that safer time always comes back around to you.
Right. And for the record, I still am in crypto, but I'm more into the technical part of crypto and any asset period, not specifically just crypto. So yeah, th- this conversation is just a flare. shot it in the sky for those who want to know more about this super cycle, or about just how to prepare yourself for mm, something that's on the horizon. That's all.
Yeah, Lynell is a person that I call and say, "Hey, listen, I'm thinking about making this move, or I'm planning to do this, so on and so forth." Lynell is the person that I call sometimes, and we talk about that amongst other things. And it's always good to have people like this. When they talk about, like, okay, look at the people in your circle. If everyone in your circle is this type of person, if you have five criminals in your circle, if you have four criminals in your circle, you're the fifth one. So now I look at this where it's like, if I have this many smart intellectual or what's it called, smart individuals in terms of finance in the circle. Hopefully, I'm like the third one. You know what I mean? It's just like, and I'm trailing behind with these guys, but I try to keep up because they have a greater affinity for it than I do, a greater passion, I would say, even than I do. I'm more of a coding person, but I try to keep my eyes on all of this, and I think this is, and I say that because I think everyone else should be. Aware of all of these things as well, and keep their eye on it just the same way I do. I may not be, as deep as they are into it in terms of practitioners, but I am a person that respects it and understands the value of it. Uh, Miguel, yeah, yeah, I know you're one as well, Miguel.
Yeah, get your chalk game up, okay? I love to be your teacher. If not me, pick somebody else, but don't go with ignorance, okay? That's a losing way every time. The only safety is in knowledge. Knowledge truly is power.
Right. Yeah, and having that information, whether it be charts or old information and things like that. Actually, no, not whether it be charts, but charts having older information that you can actually base some of your theories off of, so that you can actually make a well-educated or um, a well thought out investment or move is very important, even if it's business or anything else that's going on. But yeah, guys, I want to say thank you so much for joining me for this talk. For those that are in the chat, and those that'll come back, that'll watch this on the playback, I really appreciate you all. And this is definitely something not to scare people, but to actually also to really make people excited about the possibilities of what's to come. And I think it's going to be very, very beneficial for a lot of us in terms of, that's why I named it MGTOW Retirement, or I put it under the MGTOW Retirement banner, because I think this is going to make and break a lot of retirements, and hopefully you'll be on the make side and not the break side. So with that being said, we're not financial advisors. We're just guys talking about investments and speculation and things like that. This is infotainment. And as always, if you're not taking what I say with a grain of salt, you're low on sodium. Definitely do your research, find out more, and take the time and effort to grow every day as best as possible. Thank you guys very much. Appreciate you so much. Peace.